Good afternoon, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading Satellite Office down in sunny South Florida. Today's date is Sunday, August the 5th, 2012, and here is today's stock market weekend review. Before I go over the weekend review, I want to highlight to you guys you can access our blog on our website at wallstreettrading.com. Right here in the upper right side, click blog, and you can go to our lovely blog here, which shows our videos, calendar of events, and different blog posts that we have here, which is pretty good. Make sure you go and check it out. Now, let's go ahead and take a look to see how the indices closed the week out here. The NASDAQ was up 0.75%. The NYSE was up 0.36%. The Russell 2000 was down 0.39%. The Dow Jones was up 0.18%. And the S&P 500 closed the week out up 0.41%. Looking at our lovely chart here, you can see that the NASDAQ was the strongest index and the weakest index was the Russell, which is still showing weakness compared to, relative to the other indices. However, we're going to look at the charts here, and that could, start to change a little bit, and we'll see that in the charts here shortly. All right, so let's go and take a look at the charts. I want to start off by taking a look at the ES monthly chart as we are finally into a new month here. August looks like time is flying by for the year, and this is the second closing week. This is the first closing week of the month here. So I wanted to review the monthly chart here and highlight the fact that we had this big bar. All right, we had this big sell-off bar back here in May for the month, and notice what we've been doing the past 2 months here, just chopping back, grinding back, trying to eat up that red candle that we had right there in May. And now for August here, we're up in the opening range of the May candle. The opening level is 1394.25. Obviously, the main level that people are watching next is the 1400 level, and then the 1420 area, which is the highs of the year. If you take a look at it on a monthly basis, though, you can see we're basically just in a range between, say, 1300, call it, and 1400. So we're back at the top of the range. Let's see if these people can make the let's see if these people can get the market to get a kick up here, and we'll take a look at a couple of charts to show you guys what we are looking forward. What are we looking at going forward here? So, anyways, taking a look at the weekly chart now, you can see that we're grinding back above that key level that I highlighted on the on the weekly chart here from the past couple of videos. This 1363 level, which was resistance from back here of last year, back here in April and May. All right, it was acting as support once we broke above it for most part of the year of this year until back here in April, near the end of April, we started selling off, and then now we're back above those levels, this 1363 area here, and now the next line of resistance looks to be around 1400. So I wouldn't be surprised if we see 1400 sometime early next week, unless some type of news comes out, which we all should be familiar with the news coming out unexpectedly. So in any case, let's go back and take a look at our daily chart here. Now I'm gonna get rid of some of my jongs here, my channel lines, my highlighted ovals. All right, and we're just gonna bring up a nice looking raw chart here. You can see we're above all the moving averages. We had nice volume coming on Thursday, light volume on Friday. If I take off all these studies now so you guys can see the chart a little bit cleaner, you can see, voila. All right, we're still in that nice little upward channel after trying to shake below it here, but just originally just bouncing off of that 1320 level. And then I've been highlighting the key 1370 level. And notice how we try to get below 1370. We had a close on Thursday below 1370, and come Friday, they love the jobs number for some reason because we added more jobs, even though unemployment ticked up 8.3%, but we added jobs, so everything's all good in Wall Street's world. So hey, the markets, they bought the market up, and you just have to respect the tape and look more at the price action and not what you expect the market to do. Because if you've been doing that, then obviously you've been getting your head ripped off. But we're here to help you out so that does not happen. And we've been doing a pretty good job. And you can find that out by going to our chat room at My Wall Street TV. Access to get in the chat room is the password SMART. If you have any trouble getting in there, you can email me at ccooper@wallstreettrading.com. com to find out how to get in that chat room there. So in any case, 1370 remains a key level that I'm watching. All right, even if we say 1360 now, since that's the low of Friday's candle, which was a nice igniting candle there, back into this key resistance level that I've been highlighting to you guys from the breakdown of our nice little head and shoulders pattern that we had back here earlier in the year. All right, and now we got another official back test of that area. And I say another official back test because last week we tested that area and then we got rejected, which was the first official test of that area. All right, and now we're back up right there in a short, in a short amount of time off of one candle. Okay, so that tells me that the bulls are starting to get a little bit jiggy with it up here. As you can see, a lot of people now, after Friday's action and this nice little price action that we've been, having here, there people are going to start looking to buy stocks. If we get above this key 1390 level from this back test, like I said, this key trend line right here, we have a nice shot of getting back above 1400 next week. All right, and heading towards our upper level up here towards the 1420 area, which is the top of that channel. Okay, you see we have our nice inflection points from the previous test of that top of the channel, and now that new touch of the top of the channel will take us to 1420. All right, so that's what the ES is looking like. You want to watch a 1370, 1360, and then of course you want to watch this 1390, and then of course the key level 1400. We're going to have some resistance around this 1411 area, so watch those levels as well. All right, let's go ahead and take a look at the Qs. Take a look at the triple Qs here. Triple Qs making a nice move back up towards the upper part of the range. Actually breaking outside of this little range has been in between 65 here and 62. All right, and it looks like the Qs are shaping up. Of course, the technology stocks have been leading the way, followed by Google, Apple, Amazon's been doing some good work for the Qs here, and IBM, which we'll highlight, which we'll highlight in a few here. All right, so anyway, the Qs level you want to be watching is to make sure that we hold above that 62, above that 65 hold number. All right, and next resistance level that we have on this ETF here on the Nasdaq triple Qs is going to be around the 67 level. Make sure you keep those levels in mind there. So 65, holding above 65 on the triple Qs is bullish, even if we consolidate a bit up here and don't make a nice move higher, like some people probably want. But if we do, 67 is the next level to watch here. And of course, we're breaking outside this little long-term little range that we've been in between 62 and 65 for the past 1, 2, 3, 4, 5, 6, 7 weeks we've been in that range, and we finally got a nice little pop above that range and a close on Friday. All right, what's the next best thing we want to look at here? All right, and I'll take a look at the triple Qs, the weekly chart real quick here, since I did some nice annotations on it. As you can see, earlier in the year when we pulled back to that 60 level, that was just really a back test of this nice little range that we had last year. So the Nasdaq, the Qs are looking strong, and if you're trading the market on an intraday basis or even on a swing trader basis, and you're not on the sidelines right now, like some people I'm assuming are, that's why we could have a nice little sharp rally up if we have a short squeeze and money coming back into the stock market. All right, you want to be watching the Nasdaq stocks, the technology stocks. All right, taking a look at the small cap sector, the small cap index of Russell 2000 here. You can see that last week I highlighted the fact that the Russell. All right, let me take a look at the RUT actual index, not the IWM. All right, no, let's go ahead and take a look at the IWM. I thought I had some drawings on here. But hold on one second. I'll go ahead and get rid of all these drawings and highlight the key pattern that I wanted to show you guys, which really is this nice little downward channel, all right, that's being supported by all these moving averages here on the IWM. IWM closed Friday at 78.61, all right, and now we're watching this downward channel, which of course you guys know me being channel guy trader. This is one of my favorite patterns to trade because these usually result to the upside, pull back, all right, they usually result to the upside, pull back, and either make a higher low or just continue going straight up, which that rarely happens. So we usually get that nice little pop up, that little back test near the trend line that we broke out of right here, and then get a nice little move off. Or we usually get that little nice higher low and then a move off with not actually coming back down towards the official back test area. Or again, we can have that breakout scenario that breaks out and then fails back in the channel, and that's what you don't want to see happen if you're positioned to the upside. So again, we're watching for that break of the trend line. All right, which call it's around say 79, 80. All right, I want to see that Russell get above 80 so we can make our move back up towards the 82 area up here, which will be good. So you guys know the Russell has been the weakest index, obviously, for the past couple weeks here. So now we're going to see if the other indices try to move higher, if the Russell starts to show a little bit of some relative strength or some catch up, as you can say. IWM weekly chart. All right, nice little range here, really just between 70, 74 and 84 for the start of the year. And right now we're in the middle of the range. I guess that's why we're getting a nice little chop here, because we're having a nice little battle to see if we're going to actually push up towards the upper part of the range, or if they're going to keep us down here towards the bottom half. So we'll see. This month's going to be another interesting month, as it is always. And like I said, watch that IWM, that nice little setup that we have that's going to allow us to manage our risk accordingly with this nice little downward channel setup that we have in play. All right, so let's go ahead and take a look now at the dollar. I like to watch a dollar, of course, as the market trades inverse to the dollar. All right, weak dollar means strong markets. Strong dollar means weak markets. All right, and right now we were holding that key trend line. All right, we were holding that key trend line from the original breakout. Let me take these studies off here. I like showing you guys a nice little clean pattern, so you guys a nice little clean chart, so you guys can see the patterns and how everything's setting up. Aside from some of the stuff that people focus on, which is really, it's not really relevant. Real thing that you want to focus on is volume and price action. Some people pay a lot of attention to moving averages. I pay attention to moving averages, but not to the point where I, place them as a holy grail. So in any case here, you want to be watching the dollar. I do see a nice little interesting pattern that could be taking place here. Nice little left shoulder, head, right shoulders. At the same time, I was watching, we were watching this key trend line from the breakout that we had right here. Notice how we held the back test, held it again right here, but now Friday, dollar had a nice little day down, and we closed below that key trend line. Still watching this other lower trend line that we have in here from the nice little upper channel, but if we break this, if we break this upward channel, then the dollar could be forecasting, some lower price action here. Maybe some lower price action here, maybe back towards the 81.50 level, back towards the bottom of the range down here, or even towards 81. So we'll see, but we have to respect this candle that came in on Friday on the dollar. If we look at it on a weekly perspective, we're still in a nice little uptrend. And if we take a look at it on the monthly perspective, we're still basically just trading sideways, doing nothing here. If you look at it on a monthly perspective, nothing too crazy there. So on the short term, the dollar's getting some weakness, some selling pressure, but on the weekly chart here, we still have to respect this nice little upward channel here that we have in place. All right, let's take a look at the commodity stocks now, the commodity sectors now. Let's take a look first off by taking a look at crude oil. Crude oil futures, nice pop on Friday. Let's go ahead and thank the dollar to that move, of course. And the weakness in the dollar caused crude oil to get a nice little pop up there. We're still holding that 87.5 bid that I've been watching. All right, and we're still watching that 92.50 level, which is the highs that we made from 2 weeks ago, near that area. All right, we could start trading above 92.50. We have a chance that we can maybe start, trying to bust through these 200-day simple and exponential moving averages that are right above us. The longer we base above 87.5, the more power we're going to have in the energy markets and the crude oil to have a sustained uptrend start to take place. So we'll see how that plays out. Take a look at it on a weekly time frame, and we have two nice looking hammer candles right here, which is just some nice consolidation, showing you that for the past 2 weeks when the crude oil when crude oil has been dipping towards the lows of the week there, they've been buying it right back up. All right, and the monthly chart is still as well looking pretty decent, trying to get a nice little bounce there. Just trading sideways in general, though, from a longer term perspective. All right, so let's take a look at the gold. All right, some of you guys like to use the GLD, so I'll just go ahead and take a look at the GLD. I look at the GLD and the gold futures. But looking at the GLD, we had that nice little breakout of the nice little triangle that we highlighted. Volume is starting to pick up here, which is one thing that I love to do, especially intraday, is draw the nice little volume patterns, trend lines right there. And that kind of gives you a clue when you can expect volume to pick up. Try it on your charts. It actually works. Everything is symmetrical in this little lovely market of ours here. So GLD back test still holding above that nice little triangle, looking for a move up, back up towards 158 if the dollar continues to decline in value and these commodity stocks start to catch a bid again here. All right, so keep an eye on the GLD. As long as it holds above this key trend line that it broke and trades sideways, we could start seeing some bids come in the gold markets. right? GDX, which we like to watch alongside the GLD. GDX needs to get some action there as well, and hopefully if gold gets a nice little pop-up, this thing could get going above this key trend line that you guys could have highlighted in your charts. All right, above this little area right here. All right, so we'll see how that one plays out as well. That level of resistance to watch on that ETF on the GDX is going to be around $44. Support down here around 41, which was a low that we hit here on Wednesday. Last but not least, I want to go ahead and take a look at the VIX, VIX. All right, the VIX got a nice little breakout of the bullish falling wedge that we had take place 2 weeks ago. However, of course, there's no fear in the market, and everybody wants to buy stocks. And now we're back down towards the lows from 3 weeks ago, which also coincides with the back test, another back test since we originally back tested the trend line right here, but another back test of the trend line from the following bull wedge pattern, which is also going to line up again with that nice little double bottom right here. So watch the volatility index this week. It's going to be a key. It's going to be something I'm going to be watching close this week. The level I'm going to be watching on the VIX is going to be this 1545 level. When we break below 1545, believe it or not, the VIX could start, moving back down towards 14 and a half. And of course, there will be no fear in the markets, and the market will be moving higher. So watch all those key levels that I gave you guys. And let's go ahead and take a look at some stock charts now. ExxonMobil, a key stock that I'm watching for next week. I like the fact that it's back up here towards the 88 level, which is the resistance level that we were battling near the beginning of the year here. Right, let me actually zoom this chart out to 2 years on the daily time frame, and we can see that that is also a key level from last year. Taking a look at the weekly chart, all right, we're at some key levels on ExxonMobil. If ExxonMobil, guys, breaks above 88, you better watch this energy sector, as those energy stocks obviously are going to start moving higher, as ExxonMobil is a good, a good stock to watch in the energy sector, and a lot of people use that as a, as a gauge for that whole sector in general. So ExxonMobil breaking above 88 and holding on a closing basis for a couple days would be good for that sector. All right, you can take a look at a couple stocks in that sector as well. Take a look at EOG. All right, EOG getting a nice breakout here as well. All right, and if we draw a nice little trend line, okay, give me 1 second. We draw a nice little trend line from right here, this little pivot high. You see that, EOG is finally breaking this nice little downward trend line. All right, so look for some consolidation in this stock and look for this one to move higher. Some other standout stocks out there in the energy sector, WNR. All right, going back to the highs that we made back here in July 18th. All right, TSOs in the same sector. This one had a nice little pop up. Of course, these ones are popping up from their earnings, which shows that these refiner stocks are doing good. And you want to watch this sector for higher prices to come. And last but not least, I want to take a look at CVX, because CVX usually trades along with ExxonMobil, as these are some major integrated energy companies here. And CVX back up towards the beginning of the year range there, up towards this 112 area. So we'll see. CVX breaking above 112 and holding above 112 will be good as well. As you can see, the stock has been trending pretty well, regardless of the fact that's back above, that's back near the beginning of the year highs. The stock has been trending pretty well since back here in May. Nice little uptrend going on there. All right. Now let's take a look at these technology stocks. You guys know that Apple has been a leader in the whole technology sector. Let's take a look at AAPL. This one caught a lot of people off guard, because I don't think that many people expected the stock to get a nice little quick snapback rally off of that earnings number drop that we had there from July 25th. Apple held that 570 level, but now we're at the top of the range here. Okay. I remember highlighting to you guys in the Sunday night session, or even in the weekend video, how this 590 level was going to be key, because there was prior resistance right here. We got above it, we broke back below it. But then again, this beginning of the week, on Monday, they gapped Apple right up, and then every day from there, we know they were gapping the stock up about 3 points pre-market, and it continued higher until Wednesday. We got a gap up, they sold it, and now look, guys, we're back up near those gap up levels from Wednesday. So strong stock. Have to keep it on your radar. And if this stock breaks past 619.87, call it 620, this stock could be back in play, looking for a move back up towards the year highs. back up towards the 640 area. So keep Apple on watch. Amazon's looking decent as well still. Keep Amazon on watch for a move back up towards the 240 level. And then IBM. All right. I talked about IBM last week, saying how IBM could play catch up to these other, large cap technology stocks that are starting to outpace, all these other weak stocks and weak sectors. All right. And IBM, I like how IBM finally got a nice little close above 198. Look for IBM to possibly try to nick this 200 level and move back above 200, and start to play hardball with these other technology stocks that are doing pretty well. So that's about it, guys. Hope you guys enjoyed the video here. Please join us tonight at 9:30 p.m. where we have open charts and market commentary. You can get access to that at mywallstreettv.com. Put the password SMART in. If you need help getting to our tonight's session, contact me via email at ccooper@wallstreettrading.com. And once again, if you would like to see how we set up and trade the markets in the morning, you can join us at 8:45 in our chat room. To get access to the chat room, visit our website, www.wallstreettrading.com, and sign up for your 14-day free trial for My Wall Street TV, and you'll be able to hear us live in the chat room, trade the charts, and bring up some killer ideas. Hope you guys enjoyed the video. Enjoy tonight, and let's get ready to knock them out the park starting tomorrow. Have a great night, guys. Later.